All right, welcome to the deep dive. Today we're going to try to pull back the curtain on something that, well, impacts pretty much everyone who's ever had to shop for health insurance.
We are.
Health insurance underwriting. It's that mysterious process, right, that kind of determines what you're covered for and of course how much you end up paying.
Yeah, it's kind of a black box for a lot of people.
Totally. And for this deep dive, we're really fortunate you've pulled together this huge collection of information, articles, research, all sorts of stuff about, well, all aspects of health insurance underwriting.
I have. It's a pretty deep rabbit hole, honestly. I mean, there's just so much to unpack here.
For sure. And our goal is to sort of distill that down, right, into the most important, most interesting, hopefully most surprising takeaways for, well, for you, basically.
Exactly. I mean, the goal here is to give you a clear understanding of how underwriting works, without getting bogged down in the technical weeds.
Yeah, definitely. So let's jump right in. Could you start by giving us the big picture? Like, what's the fundamental purpose of this whole underwriting thing?
Sure. At its core, underwriting is all about assessing risk. It's how insurance companies figure out how likely you are to file a claim and how much those claims might cost them.
So they're trying to predict the future, in a way.
In a way, yeah. They want to see how risky it is to insure you, essentially. And then based on that, they decide whether to offer you coverage and how much to charge.
Makes sense. And this is all about protecting the insurer's bottom line, right? I mean, I guess ideally they'd want to cover everyone, but that's just not realistic.
Right. The problem is something called adverse selection. Basically, that means people who know they're at higher risk for health issues are more likely to seek out insurance. And if the insurer isn't careful, they can end up with a pool of insured people who are much more expensive to cover than they anticipated.
Right, they need a balance, right, of higher and lower risk folks.
Exactly. And,
Yeah.
and you'll see a lot of similarities between how health insurance underwriting works and how life insurance underwriting works. They both involve evaluating an applicant's risk profile.
But there are some key differences, I imagine.
Definitely. The biggest one is that health insurance deals with the possibility of multiple claims over time. Unlike life insurance, which usually involves a single payout upon death, health insurance is more about managing the risk of ongoing medical expenses.
So it's more complex in a way with more variables to consider.
Precisely. And that complexity means there are a lot of moving parts involved in the underwriting process.
Speaking of moving parts, who are the main players in this whole underwriting drama?
Well, it all starts with the insurance agent, sometimes called the producer. They're often the first line of defense for the insurance company, and they do something called field underwriting.
Field underwriting.
Right. It basically means they try to identify applicants who seem like good risks. Like, they're not going to submit an application from someone who's clearly in poor health and expects to need a ton of medical care right away.
So the agent's role is more than just selling policies. They have some initial screening responsibilities.
Absolutely. And during the application process, they have a whole bunch of duties. They need to make sure the application is filled out accurately and completely, get all the signatures, collect the first premium payment, and give the applicant a receipt. They also have to provide all sorts of important disclosures.
Like what?
Well, things like a replacement notice if you're switching from another policy, a buyer's guide that compares different insurance options, an outline of coverage, and a policy summary. It's a lot of paperwork.
It sounds like it. And I think I saw something in your materials about an agent's report, too. What's that all about?
Right. The agent's report, sometimes called an agent's statement, is usually part 3 of the application. It's where the agent can share their personal observations about the proposed insured.
So it's like their gut feeling about the applicant?
Kind of.
Hmm.
They might comment on the applicant's financial situation, their character, their background, why they're buying the policy, how long the agent has known them, that kind of thing. And it's all confidential.
So it's a bit like a back-channel reference check. Interesting. What about the applicant themselves? What responsibilities do they have in this whole process?
Well, first, it's important to distinguish between the applicant and the proposed insured. Sometimes they're the same person, sometimes not. The applicant is the one filling out the paperwork, but the proposed insured is the one actually seeking coverage.
Like, if you were buying insurance for your child, you'd be the applicant, but your child would be the proposed insured.
Exactly. And the policyholder is the one who holds the rights under the policy and is usually responsible for paying the premiums.
Yeah,
So there could be a few different roles involved, even for a single policy.
got it. And what's the most important thing for the applicant and the proposed insured to remember?
Honesty, without a doubt. Any false statements on the application can really come back to bite you later.
Like, you could lose coverage if they find out you weren't truthful.
Absolutely. And it doesn't even have to be intentional. If you make a mistake or forget something important, it can still cause problems.
Yikes. Okay, so honesty is key. What about the underwriter? We haven't talked about them much yet. What exactly do they do?
The underwriter is the one who really digs into all the information collected. They look at the application, any medical records, reports from the MIB, and so on.
MIB.
Oh, sorry, the Medical Information Bureau. It's basically a database that ensures share information about applicants. It helps them spot inconsistencies or things that might not have been disclosed.
So it's like a big brother for health insurance?
Well, it's more like a way to ensure everyone's being truthful and to prevent fraud. But anyway, the underwriter takes all this information and then they decide what risk category the applicant falls into.
Like low risk, high risk, that sort of thing.
Exactly. They might classify you as a preferred risk, which usually means you get a lower premium. Or you might be a standard risk, which is the average. Or a substandard risk, which means you'll pay a higher premium because you're considered riskier.
And what if you're super high risk?
Well, then they might decline your application altogether, meaning they won't offer you coverage at all.
Wow, so the underwriter really has a lot of power.
They do. They're the ones who ultimately decide whether you're insurable and how much you'll pay.
Okay, so let's talk a bit more about this whole risk assessment process. Where exactly does the underwriter get all this information they're using to make their decision?
Well, like I said, the application is the starting point. It's divided into parts. Part 1 covers all the basic stuff like your name, age, address, income, occupation, that kind of thing. It also asks about any hazardous hobbies, travel plans, military service, and whether you use tobacco.
And part 2 is all about your health history, right?
Right. You'll have to answer questions about your own medical history and your family's medical history. And depending on your answers, they might ask for more information.
Like what kind of information?
They could ask for an attending physician's statement, which is basically a report from your doctor. Or they might want a more detailed medical report, or even require you to have a physical exam or some lab tests done.
So they might ask you to get an EKG or give blood?
Possibly, yeah. If they think it's necessary to get a clearer picture of your health, and if they request those tests, they usually pay for them.
That's good to know. So it's not just about filling out a form. They might really dig deep into your medical history.
Right? And it's not just about your health either. They look at other things too, like your driving record.
Your driving record, what does that have to do with health insurance?
Well, it can give them some insight into your overall risk-taking behavior. If you have a history of reckless driving or DUIs, they might see you as a higher risk for accidents and injuries.
I guess that makes sense.
And then there's the MIB report we talked about earlier.
Right, the Medical Information Bureau. That still seems a little creepy to me, to be honest.
I understand that. But it's really just a way for insurers to share information and make sure everyone's being upfront. And remember, you can request a copy of your own MIB report once a year if you want to see what's in it.
Okay, good to know. So we've got the application, medical records, driving records, the MIB report. Anything else they look at?
Sometimes they use special questionnaires if you have any particularly risky hobbies, like skydiving or rock climbing, or if you're a pilot or have a dangerous job. They might also do a background check, which could include talking to your neighbors or coworkers about your lifestyle and reputation.
Wow, they really do their homework.
They do. And they might even check your credit report.
Seriously, what does your credit score have to do with health insurance?
Well, studies have shown that people with poor credit tend to be less healthy and have more medical expenses. They might also be more likely to let their insurance lapse if they run into financial trouble.
I never would have guessed that.
It's a bit surprising, but it's something they take into consideration. And, of course, if they're going to use your credit report, they have to follow the rules of the Fair Credit Reporting Act, which means they have to tell you about it and give you a copy of the report if you ask.
All right, so they gather all this information, then what?
Then the underwriter reviews everything and makes their decision. They'll either approve your application, decline it, or offer you coverage with a higher premium.
Okay, and that premium, that's how much you pay for the insurance each month.
Right, and the amount of your premium depends on a bunch of factors, but the main ones are morbidity, interest, and expenses.
Those sound pretty technical.
They are, but they're not too complicated once you understand them. Morbidity is basically the likelihood that you'll get sick or injured. Interest is the money the insurance company earns by investing the premiums they collect. And expenses are all the costs they have to cover, like paying their employees and running their business.
So your premium is basically covering your share of those costs, right?
Right. And the higher your risk, the more you'll have to pay. And there are other factors, too, like the type of coverage you choose, how long you want to be covered for, and how long you're willing to wait before benefits kick in.
So it's all about finding a balance between the coverage you need and the premium you can afford.
Exactly. And when they're figuring out your morbidity risk, they look at things like your age, gender, health history, occupation, lifestyle, and even where you live.
So someone who's young and healthy and lives in a safe neighborhood is going to pay less than someone who's older, has some health issues, and lives in a high crime area.
Right. And some insurance plans use community ratings, which means everyone in a certain area pays roughly the same amount, regardless of their individual risk.
And what about premium mode? I remember seeing that term in the materials.
Premium mode just means how often you pay your premiums. You can usually choose to pay annually, semi-annually, quarterly, or monthly.
And I guess the more often you pay, the more it ends up costing, right?
Hmm.
Because of processing fees and stuff.
Right. It's usually slightly cheaper to pay in one lump sum.
Interesting. And what's the difference between earned premium and unearned premium?
Earned premium is the portion of your premium that covers the time period when you've already had insurance coverage. Unearned premium is the portion that covers the remaining time on your policy. So if you cancel your policy early, you're entitled to a refund of the unearned premium.
Okay, that makes sense. And I think there was also something about a policy term and a policy fee.
The policy term is just the length of time your policy is in effect. So if you have a one-year policy, the term is 1 year. A policy fee is an extra charge that some insurers add on, either annually or just once at the beginning of the policy.
So it's like a little bonus fee they tack on top of the regular premium.
Basically, yeah.
Okay, so let's say you've gone through the whole underwriting process, they've approved your application, and now you're ready to get your policy. What happens next?
Well, once the insurance company gives final approval, they'll issue your policy, which is basically the formal document outlining all the details of your coverage.
And do they just mail that to you directly?
Usually they send it to your insurance agent, who then delivers it to you in person.
Why do they do that?
It's considered best practice, and in some places, it's actually required by law. It gives the agent a chance to go over the policy with you and explain everything clearly.
So it's like a little orientation session to make sure you understand what you're getting.
Exactly. It helps avoid misunderstandings and make sure you're happy with the coverage. And they're supposed to give you an outline of coverage and maybe even a buyer's guide, especially for more complex policies like long-term care insurance.
Makes sense. So once you've got the policy in hand, when does the coverage actually start?
That depends. If you paid your first premium when you applied and got a receipt, then your coverage usually starts on the date shown on that receipt. But if you didn't pay up front, then your coverage starts on the date the policy is issued. But it's not active until it's delivered. You pay the first premium, and sometimes you might also have to sign a statement of good health saying nothing's changed since you applied.
So there are a few hoops to jump through.
There can be, yeah. And there's also this thing called constructive delivery.
Constructive delivery, what's that?
It's a legal term that basically means the insurance company has given up control of the policy and it's on its way to you. So even if you haven't physically received it yet, it might be considered delivered in the eyes of the law.
Okay, so it's like it's in the mail and on its way, so it's as good as delivered.
Right. But if the insurer tells the agent to hold on to the policy until certain conditions are met, then it's not constructive delivery.
Interesting. So just having the policy doesn't necessarily mean you're covered. And you mentioned something earlier about an inspection receipt. What's that for?
Oh, that's basically a way for you to review the policy before you commit to buying it and paying the premium. It's not as common nowadays because most policies have a free look period.
A free look period.
Yeah, it means you have a certain amount of time, usually 10 or 30 days, to look over the policy and decide if you want to keep it. If you don't like it, you can return it for a full refund.
Oh, that's good to know.
Definitely. And an inspection receipt is not the same as a premium receipt, which is what you get when you pay your first premium.
Okay, so we've got inspection receipts, premium receipts. What other paperwork might be involved?
Well, when the agent delivers the policy, they'll usually ask you to sign a delivery receipt, which proves you received it and starts the free look period. And if you didn't pay upfront, they might also ask you to sign a statement of continued good health, just confirming that nothing's changed with your health since you applied.
Got it. And we briefly touched on backdating earlier. Can you explain that a bit more?
Backdating is basically when you make the policy's effective date earlier than the date you actually applied.
Why would someone want to do that?
Usually, it's to get a lower premium. Because premiums go up as you get older, backdating can let you lock in a lower rate based on your age at an earlier date.
So it's like a little trick to save some money.
I guess you could say that. But there are limits on how far back you can backdate a policy. Usually it's no more than 6 months, and it's not allowed for certain types of policies, like variable life insurance.
Okay, so it's not a free-for-all.
No, it's regulated. And they also have to consider your age change date, which is usually halfway between your birthdays when figuring out your premium.
Wow, this is a lot to take in. I'm starting to see why health insurance underwriting is such a black box for most people.
It is complex, but it's important to understand, at least at a high level, how it works.
Absolutely. And it definitely seems like having a good insurance agent who can explain things clearly is crucial.
Absolutely. It's their job to guide you through the process and make sure you understand what you're buying.
Well, I think we've covered just about everything. Any final thoughts for our listeners today?
Well, I just encourage everyone to think a bit more about the whole underwriting process and how it impacts them. It's easy to get caught up in the details of premiums and coverage, but it's worth stepping back and considering the bigger picture. Like, how does underwriting affect access to healthcare? And how might technology change things in the future?
Those are great questions. And it makes you realize that health insurance is more than just a product. It's a complex system with real-world consequences.
Exactly. And the more we understand about how it works, the better equipped we'll be to navigate it and make informed decisions about our healthcare.
Couldn't agree more. Well, thank you so much for sharing your expertise with us today. This has been a truly enlightening deep dive into the world of health insurance underwriting.
My pleasure.
And for all of you listening, we hope this has demystified some of the complexities of this important process.
And hopefully you've learned a few things that will help you make smarter choices about your health insurance coverage.
Absolutely. Until next time, keep diving deep.